Let's welcome in our morning guest. Vijay Chopra now joins us. Mayuresh Joshi is with us. Gaurav Bisa is also with us, and we'll soon have Shrikant Chauhan of Kotak also joining us. Good morning, gentlemen. Mr. Chopra, let's start with you. What are the picks?
I would like to recommend three stocks for today. My first call is Union Bank. I think the stock has consolidated quite nicely at lower levels. It closed at 132.80 yesterday. My view is that it should touch 145 and then 150 levels very soon. So one can start accumulating at these levels. Although a stop loss of 124 is strongly recommended on the stock. My second call is Piramal Enterprises Limited. Again, we have seen a decent run up, and I think there is still some steam left in the counter. The stock closed at 1782 yesterday, and I think that this can surely run up to 1825 very soon, and a stop loss of 1750 should be strictly kept on the stock. My final call would be ONGC. The stock closed at 199 yesterday. It could be bought for a target of 215 and a stop loss of 185 should be kept on the stock. ONGC holds about 49% in Pawan Hans, which the government of India is planning to divest. So it will bring value in the company, and this can actually trigger an upside in the stock. So these are my three buy calls.
Gaurav, what are your calls based on derivative analysis?
Good morning. My first recommendation would be buy on Power Finance Corporation. We have seen a strong amount of buying in lot many power stocks. PFC on the verge of giving a strong breakout. A lot of buying in 140 call option with a small stop of 132. One can go long for targets of 144. Second would be buy on NDPC, another name in the power sector. Strong accumulation happening. A lot of buying seen option. Multiple month breakout is seen on daily charts in NDPC. A small stop of 167. One can play for targets of 190, 195. Third recommendation buy on Ken. We have seen consistent long positions getting built. The rollover numbers are also quite positive in Ken. Again, on the verge of giving a strong breakout. Stop loss of 260. One can play for targets of 280. Final recommendation would be sell on CI. We have seen decent long positions, but around 1225 there is some sort of unwinding happening. So as long as it is below 1225, there will be pressure in the name. With a small stop of 1225, one can sell for targets of 1150.
Mayuresh, what are your calls for the day?
Morning, Pankaj. I think it's going to be a very constructive call on the markets, keeping in view how the budget is going to pan out over the next few weeks. So largely, I think keeping in considerations what kind of expectations one lays out from the budget in terms of rural spending, rural infrastructure spending on power. I think it will be more focused in terms of these three key areas. So power infrastructure, power transmission, I think is one area that needs to be keenly focused upon. And again, I think specific rural stocks, you might have the demonetization effect play out in Q3, Q4. But the larger picture again is indicative of the fact that government is going to be extremely supportive of these sectors. And again, I think selectively PSUs. So as a theme, I think PSU banks, OMCs, oil and gas, select infra, select real estate companies within the PSU pack have moved up significantly. But the government focus and intent is going to be on these sectors as well. So largely, again, I think these are the sectors that I'm probably looking at, keeping in view how the budget is expected to pan out.
Gaurav, what will be your call on TCS and Infosys? Both the stocks are expected to be in focus today.
For Infosys, I would be waiting to go long about 1020. There's massive OI concentration, 1020 call option. If it continues to trade above these levels, we can expect 1080, 1100 today itself. So in the opening trade, if we see around 1025, 1030, with a small stop loss of 1015, one can go long or buy a call option for that matter. For TCS, I would still wait. I don't see too much of upside or momentum coming in. We may see a small gap up sort of coming in, but I would not think that it will sustain those levels. We may see some more pressure coming in, but for now I'm not trading TCS, lack of data, but Infosys, since it is near a very crucial level, I would be interested in that.
Right. Also, two other large cap stocks that will be in focus are Hero and Maruti from the auto pack. Gaurav, any view on these names?
Maruti, we have been positioned long from 5,300 levels, and we have continued to see strong build-ups. I would rather wait for a small dip to again buy Maruti. The momentum is very strong. aggressive long positions are seen getting built, but at these levels I would not be too comfortable going long. So if somebody is having, one can hold on, but fresh entry should be avoided at any cost at these levels.
All right, Gaurav, thank you so much for being with us this morning, giving us your picks and all the stocks that you've discussed. As you go, can you please give us your disclosures?
No personal holdings in the stocks discussed today. It is possible that we may have recommended currency at LKP.
All right, thanks so much for being with us on NDTV Profit. Let's now focus on the critical macroeconomic data that came out post-market close. Let's start with the CPI, the consumer inflation, and came in as about 15%. Cable, rubber and insulated led the rise by 185%.
Right, Tanisha, as you were speaking about the macro data, Infosys has declared numbers. It was expected to declare at 8,845 and now it has finally declared the numbers. This is the pre-open reaction, 2% higher, 3,710 crores. That's the profit number that they have posted, and 3,560 crores is what we were expecting. So about 150 crores higher than estimates. If you look at it on a percentage basis for Infosys, it's about 5 to 7% higher than what the street was estimating. If I now come down to the sales number, 17,270 crores. The estimate was 17,290 crores. So about a 15 crore sort of a miss number. In terms of the guidance that they see, it's about 8.4 to 8.8%. This is in rupee terms. In USD sales on a constant currency basis, I think this would be about 10 to 10.4. However, we'll still confirm the guidance number because the wires are not mentioning that it's a constant currency number or what sort of a number. If it's 10 to 10.4, it is actually higher than what was estimated, because they did about 8 to 9%, and now I think that they have changed this number. They name Ravi Kumar as Deputy COO with immediate effect. These are management changes. Remember, in the last few quarters since Mr. Sikka has come in, there have been a lot of management changes in Infosys. The pre-open price is indicating a 2.5% higher start. What's actually happening is that the release is not opening, so I'm just trying to open it to confirm some further details. But on the first reaction, you get that the rupee revenue is a miss, but the guidance seems to be really an interesting one, and that could mean that there will be a lot of upgrades that can be expected. So the release is now open. I'm just trying to locate where the guidance is for the company. So if I look at the guidance, or this release does not mention about the guidance, it just has the tables, but it anyways points out that these numbers are looking in good and they are looking in strong. But again, the revenue growth number, the growth number that the company is points out towards a strong Q4 number. Why this guidance will be important is because 9 months have already happened now, and it's only the Q4, so you can exactly get what sort of number are they looking at on a Q4 basis. In terms of the dollar revenue, the growth that has happened is about $2,551 million, so about 2.55 billion, and that seems to be good. Okay, we have the confirmation now that FY17 revenue on a CC terms is 8.4 to 8.8. So if this is the number, then there is a marginal miss, or it's broadly in line. The street was expecting between 8 to 9. They've just narrowed the range, which actually is good. It's not particularly that bad, if one would look at the range. So the upper end was about 9%, which they have now done to 8.4%. The lower end was 8%, which now they've done to 8.4%. So they've given a broader range as to what sort of growth can be expected from Infosys. The stock price, of course, is not reacting right now because the pre-open session is behind. So that's why it's probably not reacting to that. But otherwise, on most count, these numbers seem to be good, except for the rupee revenue number. I'm still just trying to locate comments from Mr. Sikka and what essentially has happened. That should probably give us a cue. Okay, the USD sales guidance is now at 7.2 to about 7.6. If I look at the previous number, I think it was about 7.5%. So that's also broadly remaining on the same side. Mr. Chopra, I was just reading out the numbers. Can you just tell us what would be your first reaction? I'll just calculate the EBIT margins, but I believe it's about 24.1%.
first reactions, it's a better than expected result, because I was expecting some kind of a shocker, and of course I would like to also understand what kind of guidance the management gives for the Q4 and the next few quarters, because that is very vital. We are in the eye of a storm in one way, because we can expect any kind of a shocker coming from the United States. We've already listened to some news related to hardening visa norms for the IT professionals, and the Trump administration talking about very strongly about outsourcing business, and that they want the jobs to shift to US than to China and India. So we have to also keep in view that 20th the new government is swearing in, and what kind of stance they have. But all in all, I think that the stock should react positively, although I don't expect a huge upside today. But I think that if the numbers are broadly in line and a tad better, so I think the stock should react positively. Secondly, I would wait for the guidance and understand the fine print before making any comments.
Right, so I have the guidance with me. It's 8.4 to 8.8 on a constant currency term. The earlier range was 8 to 9, and what I'll tell you is that on street, only about 1 or 2 people were expecting a cut in this. Now the upper end from 9% has become 8.8%, and the lower end has become from 8% to 8.4. Should that be taken as positive? It's giving some certainty towards revenue, even if it is in line.
Well, if at all they have, the approximations are pinpointed, I think that that it is good. As I said, that the stock should react positively, and we have also to understand what kind of new client additions have been made, because this is an important part of any commentary Infosys or TCS makes. So what are the new clients they have added, and how do they see the next few quarters panning out, keeping in view the changes which are going to happen in the United States, which supposedly is one of the biggest markets for the technology companies. So overall, I would say I would be satisfied with the result, and I think that the stock should react positively today.
Right, Mayuresh also tracks Infosys very closely. Mayuresh, your first reaction, especially on the guidance. Also, I calculated the margin number. The EBIT margin has come in at 25.05. The expectation that we had was 24.2%. So it's about 100 basis points higher than that, and probably that explains that why that PAT number is slightly higher. Mayuresh, your first thoughts on Infosys numbers?
So again, Pankaj, I think the EBIT margins is a beat, because we were expecting around 24.5%. So it's definitely higher, and yes, you're right, that's trickled down to the bottom line, which is again higher than what we had estimated. The constant currency guidance that you were mentioning, again, more or less in line with estimates, I think between 8 and 9, 20 bips from the higher end hardly makes a difference in terms of the annualized guidance. But again, largely, I think the management commentary going forward, specifically in view of what we've seen with the RPS cancellation that took place a few quarters back, how they're seeing customer discretionary spending take place in the US, the immigration norms, again, I think that's going to be a huge overhang for most IT stocks. And again, I think the result is not a shocker. So in that sense, again, I think it's more or less in line with expectations. And if I'm not mistaken, I think the dollar revenue growth has been 1% down. So I think it's a 1% degrowth or 1.5% degrowth in dollar terms. But largely, again, I think it's the management commentary that's going to do the trick for IT stocks in terms of both discretionary spending trends going forward, as well as the inherent issues that they probably foresee, what happens with US immigration and how they are equipped or able to manage the escalated cost related to the same. So I think numbers more or less in line with estimates,
right,
but management commentary holds key.
Mayuresh, I need to talk to you about Infosys in further detail, but markets are opening now, so we'll just look at the reaction. Infosys is up 3%, 1,033, about 37 rupees on the higher side. BHEL is up 1%, Tata Steel is up about 0.5%, and Hindalco is up close to 0.3. Tata Motors about 0.6% higher. Bank of Baroda is on the higher side. Infosys is the top gainer right now, 3% higher. Let's look at TCS as well. Numbers were broadly in line, but there is that big management change, and how essentially the markets would react to that. That is something to watch out for. 2,348, clearly no change on TCS, but would not be surprised if there is a little bit of decline on TCS, because Chandra has been the face of TCS, and with with the sort of changes that you're seeing, maybe some investors are concerned. But again, such transition phase have happened into companies earlier, so it can happen again as well. Infosys is up 29, TCS is slightly on the higher side. So Infosys is right now gaining headlines, 3% higher. Numbers are looking decent. Guidance is looking broadly fine, and some of the other technology stocks are also reacting. So you have Tech Mahindra, which is up 2%, BHEL, which is up about 1.2%, 129, 130, close to 130 rather. For BHEL. Tata Motors up close to 3 rupees, 520 for Tata Motors. So that's also a name which is going up. Tata Motors DVR is on the higher side. It could be because of what's happening as far as the entire Tata group is concerned, or the changes that we are seeing on Tata Sons. Tata Steel is up 0.5, Tata Power is up about 0.5% or so, and Tata Steel has also opened on the positive side. Let's look at some other names from the Nifty pack as well. So if I just go to the Nifty pack, ITC is down about 0.5%, Adani Ports is flat with a positive bias. L&T was among the top gainers yesterday and following up with very good move of about 0.5 odd percent. Reliance is up about 0.5% and Sun Pharma is up close to about 0.2. Ambuja Cement slightly lower. Coal India about 0.8% on the higher side, and BPCL up about 0.8%. Aurobindo Pharma lost out yesterday, today trying to gain back, 699 for Aurobindo Pharma. Wipro is up close to about 1% or so, or slightly lower than 1%. Wipro tends to do what Infosys does, and maybe that's why it's on the higher side. HUL is up, actually HUL is absolutely flat. IndusInd Bank 1224, and Asian Paints is down about 0.5%. GAIL is up about 0.58, Kotak Bank is up about 0.3, Grasim is absolutely flat, and HDFC Bank is also on the flattish side. Mayuresh, just talking about Infosys and the point that you were making, margins are slowly and steadily inching towards what TCS did. So TCS did 25.9% EBIT margin. Infosys did 25.1% in this quarter. That should be taken as a positive, right?
So prima facie, yes, Pankaj, because the expectations largely were margins being constrained in the band of 24-25. Now it's up to the management to probably give us further clarity whether they're still expecting margins to stay in this band of 24-25, because post Q2 results, they had indicated EBIT margin bands for FY 17 and 18. So whether they're holding on to this bands in terms of how the performance will be going forward. Secondly, again, I think in terms of the RPS cancellation itself, I think that is going to create some amount of overhang as far as the margin performance goes, because there has been a ramp down of 3,000 odd engineers. And again, I think how that impacts utilization levels on a blended basis across verticals for Infosys is to be keenly observed. Third, I think they have also announced schemes of ESOPs across grades within the organization to probably retain talent. So in that sense itself, I think the margin expansion might look a little bit constrained, at least from the next 2 to 3 quarters perspective. And the fourth most important point probably will be in terms of how the new orders are probably coming through, what kind of TCVs they've probably done. They did almost $1.2 billion last quarter. The management was very, very hopeful in terms of having large TCV deals done. And again, it's that entire perspective that we keep on talking about, immigration and how that will impact IT companies. But if the US economy improves on a macro scale and structurally, I think a lot of funds should start flowing through the BFSI segment. 32-33% is the contribution in terms of that vertical for Infosys. And if there is higher discretionary spending coming through specifically from North American clients, my entire sense is that the margins should also be relatively better. So let's have a look in terms of how the management guidance will be. But this is some of the takeaways that I've probably got from Q2 and whatever we've seen in Q3 core numbers so far.
Right. Shrikant, could you give your levels for Infosys and TCS?
Pankaj, good morning. I think the way today the stock is open around 1020, 1030 levels, and the way the stock has formed, overall its formation in last almost 3 months, there is like a lot of outperformance in all IT stocks as well as in CNX IT. We are of the view that they are definitely going to do well, at least for next couple of weeks. And for the day especially, 1030, 1045 is certainly going to act as a very good resistance for it, because the stock is like around these levels for almost last 2-3 weeks, and now the stock has managed to reach the levels of 1040, which is 40% retracement of its entire fall. So certainly around these levels some profit taking is going to come, but I am of the view that eventually it is heading for 1100, 1120 in next couple of weeks or months. So it will take time. The trend is going to remain gradual, but certainly the trend is going to remain positive. TCS, I'm not very much convinced with the overall formation of TCS. Currently it is at 23.15. On monthly basis, the stock has broken its important trend line, rising support trend line, which is actually negative until the stock is not managing or is not sustaining above the mark of 24.50. I think the stock is going to remain under pressure. So in case if we see the stock is heading towards 23.50, 23.75 in next couple of days or weeks, we should look for reducing, or we can switch this particular stock, I'm going to say investments, from TCS to either HCL Tech, where there is a lot of outperformance, or in mid cap IT stocks where there is a lot of action. So we like Sonata Software, we like Nucleus Softwares, we also like Geometric. There like we should look for adding positions.
Right. Right now, Infosys volumes are about 2.6 million shares. It's up about 2.3%, and TCS also has fallen off the day's high, but still volumes are pretty high, 2,312. That's where TCS is. That's Infosys for you. Clearly, it's an action. It is going to be an action-packed day for volumes even going ahead, and for TCS, the volumes are way higher than what it generally tends to be. 2,304, slightly volatile for TCS, off the day's highest point, but volumes are very high. So maybe if volumes pick up and there is some buying, it could retrace some of those levels. Mr. Vijay, one last word on TCS. What do you make of the numbers and the changes of the management? Will that keep investors slightly concerned as to how delivery at TCS would happen in the next few quarters?
I think that the new management and the new boss has to fit into very large shoes, and only time will tell how much he is able to do that. So one, there is skepticism over that. Secondly, overall my comment on the result is that the guidance has not been that positive. So as I was mentioning earlier also that United States being the biggest market, we have to see what kind of commentary comes from the United States. So I would be a bit skeptic on TCS, and as I said earlier that Infosys seems to be a tad better, but we are seeing that some kind of profit booking is happening. So the stock probably could slip down to maybe 1,010 or maybe 1,000, but I think that buying should emerge from there, and it can definitely go back to 1,100. But as of now, TCS seemingly is a bit weaker, and I think that it can head towards 2,200 seemingly.
At 2,200, will TCS become a buy?
Well, again, as I said, that we have to understand what kind of commentary comes from the United States. So if it is a positive commentary, and as Mayuresh also said that US being the largest economy, and if at all we see a good revival in the US economy, so the IT spend would increase over a period of time, which can benefit the IT companies if at all there is no major impact of outsourcing business as we everybody is talking about. So if at all things are okay, so probably we can see buying coming again in the IT counters. So I would wait for that commentary before making any any comments.
Right. In terms of commentary, we have the guidance, we have the quotes coming in from Dr. Sikka. 10 o'clock is when the management is expected to speak. What would you want to hear?
Well, definitely, I want to hear how they are going to steer the company forward. What are the new client acquisitions they have done, and what are their plans post the Trump administration swearing in. So the one thing I've been iterating is that the Indian companies, the large IT ones, would also get a lot of orders from the domestic market, because if India has to be a digital nation, there has to be a lot of things which these companies would contribute to, even in the government processes or even in the private sector. So apart from the international business, there is also going to be a large chunk of digital business which is going to come from India itself and the government of India. So I'm quite hopeful that going forward we're going to listen to this kind of a commentary, what kind of business would emerge in India, and their dependence upon US and Europe would be a bit lesser than what it was earlier. I also see that the European economy gradually would come out of its blues in the next 6 months to 1 year's time. So probably we can hear that they'll acquire new clients in Europe, because Europe has been in doldrums for a few years now. So as Europe also becomes stronger, so probably they can also shift their focus more on Europe and UK, and if at all there are curbs from the United States, so they can shift their focus to other countries. So I think that I would like to listen what is their strategy going forward for the acquisition of new business and new clients.
Mr. Chopra, thank you so much for taking out time for us. Srikanth, always a pleasure. Mayuresh, good to get in your perspective. Just before we go, let's start with you, Srikanth. Any disclosures?
The stock we discussed today, they are in my portfolio, as well as I have recommended to my clients. So the net disclosure is that we may have positions in stocks which we recommended today.
Mayuresh, disclosures for you?
Pankaj, all the stocks we discussed, I think no personal holdings, but we may have discussed this with our clients, and it is possible we might be holding these stocks on behalf of our clients and our funds.
Mr. Chopra, finally for you?
No personal holdings in any of the stocks talked about. Our customers might be having.
Right. Thank you so much, gentlemen, for taking out time for us. Always good to get in a perspective. On that note, we're taking a break. We're coming back in 2 minutes. Don't go anywhere. Lots more lined up on the other side. An exclusive story on Hero MotoCorp coming in on the other side.